Welcome back to Smart Money on CNBC-TV18. It's the last and final Smart Money of the year. Thank you for sticking around this entire year and hope you have a great 2023 filled with health, wealth, happiness and everything in between. Gurmeet Chadha of Complete Circle Consultants has been speaking to us to fulfill one of those wishes, which is wealth and how to create that. So before the break, of course, we spoke about a lot of stocks and let me just revisit them for you. IDFC First Bank, HDFC Bank, Linde India, Solar Industries, Gokaldas Exports and Uno Minda. But let's move forward now. Gurmeet, what is theme number 3?
There's been a little out of favor theme. It was a darling in 2021. I call this digital, and not just IT. And within digital, I like ERD because I think that's something which is transformational. So it's a tale of two different. So one of the picks has done very well, and one of the pick has actually, after doing well, corrected 40-50%. So let's start with one which has corrected, which is Tata Elxsi. So if you see our ERD, which is engineering, research and design, if you see NASSCOM predictions, India's share is likely to become about $65 billion. That's almost like 2x of what it was in 2020. While a lot of people think that ERD is more discretionary, I personally think that anything which is more transformative can be deferred, can't be discretionary. So there was so last quarter is when I think the stock started correcting, because after 7 quarters of 7% CC growth, the growth came down sub 5%, and the margin first time came down below 30%. And there was some slowdown in media and transportation, which is related more to OTT and others. And even the core segment, which is embedded product design, which is to autos and etc., saw some aberration at 3-4% CC growth. But I honestly think that this story is more structural and more long term. Also, some of the cost headwinds like on-site costs going up, travel costs going up, more freshers taking time to get billable, I think will probably play out over the next 1-2 quarters. The stock has corrected probably more than 40%, still is slightly more premium vis-a-vis others. That's something, if you want to hold something for, let's say, 4, 5, 6 years, I think this is a great story to play. The second one within this space is KPIT Technology, which has actually done very well. They've raised guidance to almost 23%, did an acquisition, continues to add more brands. They just added Renault last month. The stock did made a new high despite headwinds around the ERD space, and it only specializes in giving digital solutions, embedded softwares to OEMs. So of top 15 OEMs in the world, 10 are KPIT's client, and it works very closely with them, in terms of, and as I said, the margin guidance has also been raised up.
But, with these IT stocks, right, Tata Elxsi, KPIT Technology, the only problem is, these stocks have corrected quite a bit and the overall mood in the IT space is a bit somber. I know that's the best time to buy when the market is fearful, I get that. But these are also well-discovered names, right? The stories are well-discovered. So do you think there's still a lot of alpha to be generated here?
No, I think so. Sonia, as I said, that only when the news is not good is when the prices are better. So as I said, 2021, nobody was touching banks. Banks were the way underperformer in 2021. 2020, it was pharma and specialty chemicals. Nobody wants to touch it now. So you got to start getting into when news is bad and there is pessimism, and then gradually build around it. That's the way you generate alpha. And sometimes we focus too much on the name. We don't focus too much on the sizing of the name, right? If you don't buy it enough, it doesn't really move the needle.
All right. And you like the largest one in this space as well, Infosys. So is that your buy on dips pick? Because Infosys has had a really rough ride this year, but you still have high conviction there?
Absolutely, 40th year running. What a wealth creator it has been, right? I don't need to talk much. If you look at last quarter, just one figure I give you, the cloud revenue for Infosys crossed $1 billion, led by their Cobalt and cloud-led capabilities. So I think this lot of this cloud transformation demand is multi-year. We were a $1 billion industry in 1999. Today we are upwards of $200 billion. Our IT services would be $500 billion by the time we end the decade. Returns 80% of the capital, has, as I said, corrected a little bit. So this one probably could be the steady one in the portfolio, which can probably compound at maybe 15%.
Okay, that's the IT space, and perhaps the time to buy is when times are tough, and that's the theme that Gurmeet is looking at. All right, let's move to the next theme, Gurmeet. What is it?
So there's one, Apollo Hospital. So I wanted to pick something from pharma. I chose the hospital space because we have covered CDMO multiple times. So I think that's something which it's the hospital. It's a pan-India presence now. The occupancy rates, which we called, average revenue per occupied bed, that's the metric hospital use. That continues to pick up. The case mix is better. The share of surgeries, the complex surgeries, has gone up. They've been investing now in the other segments, which are, I think, very good growth drivers, which is pharmacy, doctor consultation, diagnostics, etc. And they are now complementing digital with physical. So they've already added 450 stores in H1. In Apollo Pharmacy, they want to add another maybe 350 more. So take it about 800. And that 24/7 digital platform has some near-term headwinds, but I think that's something which will be the future. So it's multiple play on, as I said, the digital ecosystem around healthcare, the hospital segment, and the fact that the penetration levels are too low right now. So that's something I like more. And the last one is a telecom name, because for the first time after maybe 10 years, Bharti Airtel, in my view, is now reaching a stage where they can generate free cash flows, which can start deleveraging the name. In fact, they have just done tariff hikes in two circles. They've withdrawn the 100 rupee minimum recharge, and trying to test that if the minimum one is now 155. If that follows through, you could see the ARPUs inching up. It's already gone up to 190. The African business is doing very well. The home and the enterprise business is doing pretty well. And it's a complete, as I said, digital ecosystem play. And now they're also planning to, monetize the Airtel Payments Bank. This is technically the first payment unicorn, which is a profitable one, which can give them the necessary growth capital as well.
Okay, so that's a lot of themes. We've run out of time, but not out of ideas, right? So let's do one thing. In case any of our viewers missed out on the stocks and the themes that Gurmeet has picked out, we are going to get it up for you here on the wall, and you can perhaps take a snapshot of this. This is Complete Circle Consultants' view. These are the top ideas for 2023. We start off with financials, IDFC First Bank, HDFC Bank, followed by the manufacturing sector, which is their big theme this year. Linde India, Gokuldas Exports, there's Uno Minda, as well as solar industries. Then a theme that they really like is technology. So there's KPIT Tech, Infosys and Tata Elxsi. And let's wrap that up with Apollo Hospitals in the health space. They also like Bharti, which is the telecom space that they've been, sort of following and investing in for a long time. So those are some high conviction ideas that Gurmeet Chadha has put together for us, and hope this helps you create a strong and consistently growing portfolio for yourself. Gurmeet, thanks a lot for joining in once again. Have a great 2023. Until we speak again, you folks stay safe and keep watching CNBC TV 18.